In a world where one push can send economic dominoes falling, China's property storm is sending a long shadow beyond its Great Wall. It is very hard to feel the dragon's waves in Australia, which is very hot right now. From the busy streets of Sydney to the vast outback, rumors of Evergrande and Beijing's housing problems can be heard. Let's get caught up to find out how the fate of penthouses in Shanghai might affect homes in Australia. So, let's begin to figure out what's going on here. Let's get caught up to find out how the fate of penthouses in Shanghai might affect homes in Australia. China's real estate market used to be a huge part of its economic growth, but it's about to take a big turn for the worse. That time of precipice might be the trouble that its biggest real estate developer, Evergrande, is having. The business is in big trouble because it owes investors a huge $467 billion, and its founder, Hui Ka-yan, is being sued. Evergrande is more than just a business. It represents the huge size and risks of China's real estate market. Its history from being the symbol of China's property goals to something that could bring it down is a lesson for us all. Hui Ka-yan's rapid rise from poverty to becoming Asia's richest person is a lot like how China's property bubble burst. However, the boom is clearly about to pop since the company's shares have dropped 99% in the last 5 years, and the 3 red lines policy makes it harder to borrow money. While the impending failure of Evergrande would be terrible for many Chinese investors, the effects of this possible disaster are expected to be felt all the way to Australia. In its review of financial stability, the Reserve Bank of Australia pointed out how dangerous it is that China's housing market is currently unstable. China and advanced countries like Australia don't have many direct financial ties, but there are some important indirect effects. People in China expect that a big drop in the economy will mean less demand for Australian goods, which will have an effect on important parts of Australia's economy. Iron ore, which is a big product for Australia, is a good example of this. A big part of Australia's exports to China are iron ore, which is needed for building roads and other projects in China. Since China is going through a real estate crisis, fewer infrastructure projects could make a big dent in the market for iron ore. To make matters worse, this would mean less money for Australia from its important product, which could shake the country's economy to its core. While we have you here, we'd also like to give you a polite reminder that if you appreciate our content, don't forget to hit that subscribe button to show us your support. Now, apart from this situation also affecting commodities, a possible downturn in China's real estate market could also affect Australia's home market. As the Chinese real estate market loses its appeal, more Chinese people are likely to look for investments in other countries, with Australia being one of the top choices. Australia is seeing a big increase in population right now. An influx of Chinese real estate investors could make even more people want to buy homes, which could drive up prices in major towns even more. There are 2 different ways that this kind of migration could affect the Australian home market. On the one hand, rising demand could push prices through the roof, but on the other, it might not. Cities like Sydney and Melbourne already have a hard time making sure their people can afford to live there, and property values could go up even more. But on the other hand, this rising demand could put even more stress on the housing supply, making it harder to find and buy a home in big cities. Inflationary pressures could also show up if the Australian housing market gets better because of more Chinese investment. If the Chinese market was bigger, this is what would happen. With this in mind, it's possible that changes in interest rates would not be as noticeable. This would make things harder for both the Australian government and its banking institutions. It is important to think about how this situation will affect people's social and cultural lives as well. Over the past few years, there has been a steady rise in the number of Chinese students who choose to go to college in Australia. The majority of the time, their families buy homes because they see them as investments and places for their kids to live. Because China's real estate market is so crazy right now, this trend may pick up speed. There is also a chance that the Chinese property problem will make more Chinese business owners and investors look for safer places to move their money and businesses, like Australia. Because the population could grow, there are more challenges and possibilities available. While it could make Australia more multicultural and open up new business opportunities, it also brings up concerns about integration and social cohesion, as well as the possibility that the presence of foreign investors could have a big effect on the housing prices in some areas. For this fragile balance to stay in place, Australia's government will need to be able to guess what will happen. The complicated relationship between China and Australia, made even more complicated by the Evergrande case, has made people wonder how strong Australia's banking institutions really are. The Australian economy has always been supported by these organisations, which have kept things stable even when times were tough. Need to rethink their ties to the Chinese market and any structural risks that might come up because of the possible effects of China's property crisis. Australian banks have always been proud of how well they handle risk. They may need to take a closer look at their loan portfolios, especially those that are tied to the property market and commodities, which could experience a slowdown. This crisis also shows how important it is for superannuation funds, which are a key part of Australia's economy, to have diversified investment plans. Making sure that these funds are exposed to a wide range of different areas and industries could protect against any problems that come from the Chinese market. This crisis also gives Australia a reason to look for new trade partners as it evaluates its place in the global market. China has been the biggest player in trade, but expanding trade ties could keep Australia's economy from relying too much on just one partner. In the long run, this would make the economy more stable and help it grow steadily, but it's important to keep a tone of cautious confidence. Australia is facing real problems because of China's real estate crisis, but it also has a chance to do something great. Australia could stay strong in the face of global economic problems by expanding its trade, supporting its own industries, and making thorough financial policies. Finally, the story of China's real estate market is not only a tale of a country's economic progress, but also a reminder of how our global economy is linked. Even though it has its roots in China, the Evergrande saga is a sign of things to come in foreign markets, especially for countries like Australia that do a lot of business with China. The world is paying close attention to what's going on because they know that China's property problem will have effects far beyond its borders. Don't forget to share your thoughts in the comments below and check out some of the other videos on your screen.